Hi everyone, welcome back to Cheddar, brought to you by HP. For this week's Keep Reinventing segment, brought to you by HP, we are joined by Mario Schlosser, the CEO of health insurance startup Oscar. He's back with us on the show. Thank you so much for joining us again.
Thanks for having me.
All right, so this week you announced a strategic partnership with the insurance agency Humana to bring commercial health insurance to small businesses in Nashville, Tennessee. Humana is already in this market, so what's appealing for them in terms of this partnership? What are the benefits?
Yeah, first of all, maybe a bit about Oscar. Healthcare is a frighteningly complex and overly costly system for many of us. I started the company when I couldn't figure out my wife's pregnancy, how to manage the pregnancy really. And we said the insurance company is in pretty good spots to really simplify the system quite a bit for you, help you navigate the system. And so what we built in a very unique way, I think, is technology, data, personalized service to really engage members around their health and around staying healthy and treating diseases, if that came to pass, in a way that's very unique. And the partnership between Humana and Oscar really leverages that. We can deploy our plans, which are loved by individuals, which individuals tell their friends and family members about, now in a business setting to employers in the Nashville area.
Okay.
Oscar, we just got a revised version of the Senate healthcare bill earlier today. I'm intrigued to get your take on what you think this healthcare bill will do to the health insurance market.
I probably can't comment yet on the bill itself. It's been only a few hours. We got to take a look at it and see how that works.
Well, not a lot has changed, so I'll just ruin the surprise for you.
So I would say what I've said in the past, which is we shouldn't call the play-by-play. This will move a couple of times before it will move towards the finish line, if any at all there. What I am very confident of is that people in DC won't be suicidal enough to throw 25 million people off their health insurance. I don't think that will happen. It would be fantastically bad for the country, frankly, and for society, and I don't think we're going to end up in that situation. And so no matter what the play-by-play will be, somehow I think there will be a stable individual market. We see this in the markets we are in. It took quite a bit of navigating and getting used to this much more consumerized market that the individual market is, where individuals are now exposed to the crazy high unit costs of the US healthcare system. In the fourth year now, there is a decent amount of stability in many key markets, not in all markets, many key markets. And I think it would be very foolish to take that away, particularly because in 10 years from now, if you really play the tape forwards, much more of our health insurance and healthcare market will look more individualized.
So would you say, those who say the Obamacare insurance market is starting to kind of crumble and it's been very difficult on a lot of health insurance companies, would you say to them, well, it seems like the market has stabilized and things are going in an upward good direction?
That's what I would say, exactly. Okay. Not everywhere,
yes,
but in key markets, yes. If you look at Texas, for example, a state where you didn't have a Medicaid expansion, so the local regulators and local government didn't really fully embrace the health reform, the ACA a few years ago, you actually had the statewide average risk score go down between 2015 and 2016. So the population insured in the ACA got healthier over time and over that year. And that's a pretty good sign that you don't have an actuarial death spiral. That isn't the case for all markets. There's some other markets where that looks worse. And you will need more stabilization going forwards. And one of the things that's good in this bill is they are taking more money and stabilizing the market in the short term. That's positive, and it indicates what we have also been seeing from HHS and CMS, the regulators and the government's agencies that manage this basically, that they have been issuing rules that further stabilize in details and in the overall big picture the way the market operates.
Now, with all of the changes that are happening in policy, how does your company stay on top of that and reinvent itself through all of the changes? And as an industry as a whole, as the healthcare industry, how does that continue to evolve as these things are happening on a day-to-day, minute-by-minute basis?
Yeah, so we were the first newly licensed health insurance company in New York State in I think 20, 25 years or so on the commercial side. In California, when we entered last year, the first licensed insurance company in like 25 years, 30 years or so. So it doesn't happen a whole lot that you have new entrants in the system. And it happens not without coincidence at a time when there was big disruption to the market, when you had this reform work going through, which opened the door for people like us, and pretty much only us, to come in and say, there's got to be a different way of running this, because the outcomes we've had from the system to date haven't been good. So we are spending way too much on healthcare as a country, as a society, as compared to any other country in the world. And so That's been powerful. We've been able to do things like make telemedicine totally free, get much more utilization there, introduce concierge teams, personalized service for Oscar members, route members to the right care, to the right doctor, right hospital for them, that other insurers haven't really been able to build. And so that shows the power of being in this market when there is disruption. But yes, it's also difficult to navigate. And every day we are very cautious and careful in making sure we are buttoned up and run an excellent operation for the members we have to make them happy.
Let's talk about a very large undertaking that you guys are about to go under and hoped you wanted to accomplish by 2018. You're looking to expand and introduce your product and health insurance products into these important states: Ohio, Texas, New Jersey, Tennessee, California, New York. That is a lot of people by 2018. How are you guys going to be able to do that? That's a very big undertaking.
We spent the last 5 years not just managing health insurance, but building a full stack insurance company. Really everything in-house: claims, medical management, network construction, algorithms for physician routing and things like that. That now gives us the ability of actually going into all these states and serving all these members in a way you couldn't have done if you were, and if others are, on a legacy technology system, on a 20-year-old claim system, on a network they didn't build themselves, in outsourcing to other vendors key parts of the infrastructure. These are all things we do in-house, we built a full stack technology for. It requires a very tight operational approach with technology others just don't have, which is why Cleveland Clinic and Humana want to work with us, because we can bring that to bear: technology, data, design, personalized service, and frankly, happy members who support us and who give us feedback in managing their healthcare every single day.
All right, Mario Schlosser, CEO of Oscar Health, thank you for joining us again on the show.
Thanks for letting me be here.
Best of luck. All right, guys, coming up, a new way